take a look at an interesting conversation then. And the world's biggest electoral exercise will kick off in India with elections starting in over a week from now. India Inc. is expecting the continuation of big ticket reforms in addition to tweaking of current policies to maintain economic growth by the new government. ED Now's Chaturvedi caught up with the President of Confederation of Indian Industry, Dinesh, in this exclusive conversation on elections, economic impact, as well as India's overall economic growth. Take a look.
Our focus has been on, as I said, growth and inclusive growth. We are speaking about broadly 3-4 areas. So first and foremost is the fact that we are looking at the continuation of this growth happening through the big ticket reforms. One is on land, other is on labor and agriculture. If you really look at it, we believe that this has to be done through a consensus building with the center and the states, and therefore a body like the GST Council can be set up to make this implementation possible in a fast manner, because these are all actions which will have an impact on competitiveness and our growth story, not just for now but for the future as well. The second aspect of it is what we call as inclusive business growth from an MSME sector perspective. As you know, the government had done a very good scheme with the ECGLS scheme. We are seeing actually it can be institutionalized, and the support for the capex and opex can be done through a manner in which a fund is created and a rating agency is deployed to develop an MSME based rating. The third is the focus on education and healthcare. Here on education we are speaking about in excess of 6% of the budget, and also healthcare to be about 3%. Final focus is on employability and skill development. So on the employment side, we are speaking about an employment-linked incentive plan, which actually can be rolled out and which will benefit these few sectors like logistics, tourism, healthcare and hospitality. And on unemployment, to be able to provide the necessary skills to them and upgrade skills required, especially for the new age sectors like AI and the digital usage of technology.
So first 5 years for setting up a base, the next 5 year, the current government, many other reforms. There are many other flagship schemes like Make in India, PLI. Do you think these flagship schemes will be continued now in the next government when it comes?
Yes, we believe they are very useful for making sure India's growth story and India's position in the world stage is much better because of those schemes, and they are what I would call game-changing ones, right? So not just continuation of these schemes, but also making sure that relevant, I would call it, tweaks are made to make it even more attractive and make it even more better from an implementation angle, is something we will definitely work closely with the incoming government on. And if you look at certain things like GST, for example, we believe rationalization will further help enhance the growth which has happened from a GST angle, and also make it easier from a cost of doing business perspective.
So talking about the current government departments, they all are busy making 100-day plan, first 100-day plans. First, how do you see this exercise? And also, when it comes to you, what will your 100-day plan going to be if it is expected out of you?
I think for us, it's the intent and the speed of implementation which we will look at. And that's something which we believe there will be continuity, with respect to the party in power.
So sitting in the first month of the current financial year, what's your outlook for the economy for this current year? What are the major challenges and headwinds and tailwinds both for the economy? And also RBI is projecting 8% GDP growth. What about the GDP growth projection?
So actually, if you look at the last year, we had given, I think when I met you at the beginning of last year, I had mentioned to you we were looking at about 7% growth, and we have actually exceeded that. So in a way, I think we've been conservative by saying we are looking at the same 7.5% and above growth for next year. And obviously RBI is a very conservative body, and we believe that if they are saying 8%, that's a very clear indication of how the growth in future is going to be. So if you look at from the approach to growth, I think we are fairly confident. You have rightly pointed out what are the headwinds and tailwinds. I think the tailwinds are many, so I won't get into those details. But if you look at specific headwinds, I think first and foremost is the global issues which we will face. The second issue is what impact it will have on commodity prices, especially global commodity prices. How that will impact India is another factor which we will need to watch. From a domestic angle, obviously it is a monsoon, and we believe right now the current forecasts are for a good monsoon. And I think our has managed inflation beautifully, and we believe that they will continue to do so. And therefore, we are not so much worried about inflation from the India context, but it is also more about the global context which we need to watch.
Sensex at 75,000 as we speak. Well, that is closed for the first time at 75,000. How do you see this particular benchmark? And from here to 1 lakh, is it near? How do you see this with the economy? How do you see this 75,000 figure?
So, it's very difficult to predict what is going to happen to the stock market perspective. But having said that, I think we had the SEBI chairperson over in one of our events recently, and I think that's what is happening to the Sensex is a testament to how the economic future is being looked at. And I think the fact that India is forecast to grow at 80% and above, and not just for 1 year, 2 years, but for a fairly long period, and the focus of what has happened on the competitiveness of India is why I think this optimism is there from a Sensex perspective. So rather than hazard a guess as to when we get to 100,000, the way I will look at it is, if we continue our economic growth, the Sensex will also reflect that.
If you like this video, then like, share and subscribe to ET Now.